Welcome to the Cover Your Assets podcast, a show for the physician who understands the importance of protecting everything you've worked so hard to achieve. If you're ready to find the peace of mind that only financial security can bring, let's get started. Here's your host, Billy Gwaltney.
Welcome to today's episode of the Cover Your Assets podcast. I'm your host, Billy Gwaltney. It's good to be with you as always. Today I have a special guest, Kyle Christensen, a financial advisor based in San Antonio, Texas. Kyle is here because he's going to be a part of an educational webinar series that I'm planning to put on for my clients and offer free of charge, no strings attached, just to provide some significant insight, hopefully, in the two primary approaches to financial planning. One is the traditional approach. The other one is the non-traditional approach. Kyle represents the non-traditional approach. And just to provide information to clients, because I get a lot of feedback that there are just a lot of questions. And so today we're going to get to know Kyle a little bit, pick his brain, find out how he got where he is, and we'll take it from there. So Kyle, thanks for being here. Grateful to have you.
Always happy to be on your podcast, Billy.
Yeah,
It's great to see you.
Thank you. Yeah. The educational series is going to be called Cover Your Assets from All Angles. And again, we're going to talk about anything from retirement planning, education planning, asset protection, you name it. So everything is on the table. So Kyle, let's start with a question about your journey to where you are now, how your interest in financial planning, financial things came about, and what influenced you to set up shop the way you have and offer advice the way you do. So tell us a little bit about how you got here.
So I decided to do financial planning because I couldn't make any money doing fishing. Fishing is actually probably my number one passion, but there's not really a career in that.
Make money fishing, but I guess you're not good enough. You're not
There's a
at
few.
that level.
There's a very few.
Very few. I understand.
But no, I started in 1999. I originally, through education, I was planning to become a physical therapist and was pretty far down that path when I read Rich Dad, Poor Dad, written by Robert Kiyosaki. And Robert Kiyosaki wrote that book in 1998. So arguably the most famous financial book that exists. And it really did affect me. It changed how I thought about things. And, I could see around me that the majority of people that I knew anyway, personally, were not financially free. Money kind of dictated what they did or couldn't do in their lives. And I just felt like, over time, as I started to learn more and more about money, which became kind of a hobby, I read a lot of financial books while I still continued to follow the path of becoming a physical therapist. But I became very interested in finances, and eventually, that's what I chose to do for a living. So I took all of the courses required by the CFP board, and soon after graduating college, became a certified financial planner, and have never looked back since. And I love what I do. I love meeting with people individually and helping them on an individual basis. Everybody's different. Even though we have some common problems and challenges we face, everybody's situation is unique. And I love that about what I do.
So your firm is called Unique Advantage, and you describe it as a premier principles-based financial planning firm and work with clients across the country. Can you elaborate on what this means, principles-based planning, and how it differs from other approaches?
Well, so principles are what really create our consciousness, or our subconscious, I guess. There's a reason why, Billy, when you go into a store, if you see something that you want, that maybe you couldn't pay for in the past at some point in time, you didn't have the temptation of, hey, putting that in your pocket and walking out the store. You had principles that you had adopted that help you make decisions. And that's what I believe is the most powerful way that we can, work towards becoming financially successful, is is that having and adopting principles that have proven to be successful over time and help us evaluate decisions and choices that we're faced with every day financially, and make better choices for ourselves, ones that actually lead to success, kind of like following a recipe.
So you've emphasized that your approach doesn't involve what you call financial fortune telling. What are, can you briefly describe what these principles are? Like just list them off, how many there are, and if there are a certain order that they go in, or does it matter, or kind of how that works?
Yeah, I mean, there's a ton of principles that exist related to money. We've kind of consolidated into 5 foundational principles that we teach people initially through what we call the initial phase of planning. And so these foundational principles that we teach just give people something upon which they can build, right?
Mm,
So, the first principle, for example, is to save a certain percentage of your income, and to pay yourself first.
mm,
And I think a lot of people know a lot of the principles that we teach. I think they know intuitively, but maybe haven't put them out in the forefront and written them down and made them very clear. And I think there's value in that. So, just as we talk about that principle of saving, what does saving mean? How is it different than investing? Why should
right.
it happen first? Why is that an important decision to make? How much you're going to pay yourself? So, it's stuff like that. So, that's principle 1. Principle 2 is, we call it maximum protection.
Okay.
If Billy, you were put in charge of building the new bridge, I can't remember the name, the Francis Scott Key Bridge that just
Right.
fell
Okay.
down, right?
Right.
If you were put in charge of building that, how would you build that? What kind of materials would you use? Would you be focused on doing the cheapest thing or the thing that works the best under the most circumstances?
Mm,
And how much would price play into that? So
mm,
in the principle of maximum protection, our belief is that people want to have the best case scenario. They want to be in the best position they can be in without trying to predict exactly what's going to happen, because we can't predict what's going to happen. We don't
mm,
we They didn't know a ship was going to hit that bridge,
mm.
right? But now that we know that that can happen, the next bridge probably is going to have something built for that,
Right. Right.
is my
Mm,
guess. So that's
mm,
principle number 2, is maximum protection, not minimum,
mm.
which is actually opposite of what traditional planning teaches. Our third principle is about replacement, being able to replace assets. How do we treat things that we know we can't replace? An example I use with people a lot of times is talking about cars. If they made a new rule to save the planet, that you could only have one set of tires for your vehicle, how would that change your driving? Obviously, it would change your driving. I've had clients tell me that they wouldn't even buy a car if that
Mm.
were the case. Um, so, how then does knowing that you can replace your assets based on a guaranteed event, how does that change things? Knowing that you can change your tires on your car, how does that change your behavior using your car? Our goal with our clients, I think all of our clients, their goal is to be able to use their money at some point in time. Well, financial institutions don't really want us to use our money. They want us to leave it there as long as possible. That's all of them. I'm saying Wall Street, insurance companies, banks, right? And so, how does knowing that I can replace all of my assets based on a guaranteed event, which is death, um, how does that change my behavior? How does that make
Mm.
it so that I can use my money more freely,
Good.
the way I would like to? So that's principle number 3, full replacement of assets upon death. Principle number 4 is related to our liquidity. So everybody I've ever talked to has heard the phrase "cash is king." Well, why is cash king? Cash helps us be prepared for negative, unforeseen events that happen in our lives, which happens to 100% of us at some point. We have unexpected events. How do we prepare for that? How do we avoid having to go into unnecessary debt as a result of those unforeseen events? And then in addition to that, what about opportunities? Many of your listeners are physicians who may have an opportunity to buy into a practice or to
Mm,
start their own. And, usually that requires funding. It requires money. And the more cash a person has, typically the more opportunity they have. And so principle number 4 is to build and maintain 6 months to a year of income storage. So we talk about what exactly qualifies, all of that kind of stuff. What are all the options? Principle number 5 is called velocity of money. And ultimately, velocity of money is what financial institutions practice, but it's the opposite of what they teach.
mm,
So, velocity of money is an economic principle that just means the movement or the uses of money of the same dollar in a system. And so, the objective of financial institutions is to put their money to use and get it back as quickly as possible. And then they use it again and again and again. It's kind of like a grocery store
mm,
mentality, right? The grocery store's goal isn't to just sell all the goods on the shelf one time. Their goal is to sell them, replace them, sell them again, replace them, and do it thousands of
mm,
times throughout the year.
mm,
So that's what velocity of money is. Now, financial institutions don't teach that to us. They don't encourage us to do that because they want the use of our money. They want to be able to use it over and over again. So in order for them to get their wish, they have to try and convince us that the best thing for us to do is to put our money into their coffers and to not touch it for long periods of
mm.
time. And so they create products, strategies, things like that to encourage us to do exactly what they want, not what they're doing, what they know that works as far as what what actually creates wealth, which is velocity of money. They're teaching the exact opposite. So our principle, we teach them velocity of money, how they can apply that to themselves personally on an individual
Mm.
basis, doing what financial institutions do.
So it's interesting, you do work with business owners and dentists and surgeons and physicians and professionals. What unique challenges do you see people that are, really good at something, good enough to make a good income at what they're doing, but they have needs and goals and desires? What unique challenges do you think they, other than limited amount of time and wishing they could do more than they do, what do you find consistent in your clients that you help?
Yeah, I would say my most successful clients are typically, and I would say time is their biggest
Mhm.
issue. It's time availability, it's energy availability, to put towards this topic of personal finances. So, which leads to, I think, a problem ultimately, and that problem is kind of looking for the easy
Mm.
path. What's the easiest route for me to get from A to Z that's not going to require as much time, not going to require as much effort. I don't have to add a second job in order to be successful. I just want to throw my money at it and have it work out. Unfortunately, that's not what really happens. That's the challenge. The problem is that the principles that apply to success in their profession also apply to success in their money. And so when we try and, our natural tendency, I think all of us, our natural tendency is to look for the easy path. And if somebody is out there coming to us, especially if the majority out there is coming to us saying, "Hey, there is an easier path. There is the easy path. You just have to send us your money. We're going to take care of you. You don't really have to know anything or do anything." That's
Yeah.
tempting. It's tempting to believe that somehow that's got to be true because so many people are telling us
Right.
that. And so I think that's the biggest challenge that the people who are what I would call highly successful are faced with.
So, is that leads into the question, the difference between what's called traditional financial planning and non-traditional financial planning. And I know I'm kind of putting words in your mouth, but mm, I think you would identify with a non-traditional approach to financial planning. What does that mean? I mean, I do think it takes time to do that, but does that mean that most people don't wanna become an expert at multiple things, so how does this tie in and differentiate from a traditional approach that someone might find with an average financial advisor that someone suggest they talk to?
Well, so I think that the time requirement varies greatly depending on exactly what we're talking about. You know, just as an example, if I wanted to own a Chick-fil-A franchise, most of your clients at some point in time could afford, they would have the financial resources to own a Chick-fil-A franchise. It's actually not outrageously
Mm.
high, the threshold. However, what would get most of your clientele, what would be the breaking point for them, would be the requirement of them being involved
Right,
actively
right,
in the
yeah,
business.
right,
So Chick-fil-A says, well, you can own a franchise, but you have to be there. And we're going to train you, by the way, for the next 3 months full
right.
time. I mean,
Just not an
all of a
option. Yeah,
sudden, right, it's not an option. So that's one end of the spectrum, right? As far as time requirement. Another end of the spectrum might be you own a condo that you rent out and you hire a property management
mm,
company. And sure, there might be a certain number of hours that are involved in evaluating and studying and, you know, maybe even traveling to the area and checking it out. But then, beyond that, there's not a lot of time involved as far as ongoing time. They can keep their day
right,
job, so
right,
to speak, right?
right.
So that could be on the other end of the spectrum, right? And there's all kinds of things in the middle, right? That could be
Okay.
done.
So how does that differ from, say, a traditional approach? And not, both different strokes for different folks. It sounds like you're saying, don't just put your money in some account and trust somebody to direct it, and that you're eventually going to end up where you want to be. Is that what I'm hearing? Is that
Right.
what you're saying?
Yeah, I mean, if I were to ask anybody listening to this podcast, is there anything in your life that has endured successfully with almost no effort, with almost no knowledge, with almost no time
Mm,
involved? Does that exist in your life? And I think by far the majority would say
right.
no, it doesn't.
Yeah.
And so what I'm just saying is success financially doesn't doesn't say, okay, well, all the principles that you know to be true in the rest of your life don't apply here. I'm saying they do apply here. They do apply here. And, the I call it the traditional planning approach, but honestly, what I'm teaching, what I'm promoting is much more traditional, much more
Mm,
historical, right? This idea of putting your money into retirement accounts or, letting professional money managers manage your money actually hasn't even been around that
mm.
long. I mean, it started in 1974 with the Employee Retirement Income Security Act,
ERISA. Right.
ERISA.
Right.
401ks didn't exist before that. That wasn't a thing. So what did people invest in? Their own property, their own business, their own thing, which is what I promote. It's the
Okay.
same thing. So this, what I call traditional, I should really more accurately call
Okay.
conventional. Okay, it's popular. It's what most people are doing, but it's really not what has worked long
Got it.
term.
Well, that's interesting. So in meeting with clients, you do your meetings remote. You go over some sensitive information. You may never meet them in person. How do you how do you build trust with someone you've never met when someone is instinctively thinking, "I need to shake your hand"? And I know a lot of my clients, I've never met them in person. I mean, I work with physicians all over the country with their disability coverage, and there is an amount of time they need to devote to it. We try to limit that and then make it easy for them to kind of check this box and get it taken care of. Financial planning, financial advising is more nuanced, ongoing. It's gonna and now my relationship is ongoing, but things can change, and the financial advisor is that point of contact when when college decisions are made, or real estate decisions are made, or business decisions are made. How do you build that? And it is something tells me you're pretty good at it to get where you've gotten.
I think a couple things play into trust, which I think is the most important factor as far as who you work with financially. One is time. I think, if a person spends very little time or even no time with somebody, how much can they really trust them? How much do they even know that
Mhm.
person? I mean, it's really a matter of time. We have a process, a planning process. It's not one meeting and we sell you the magic product that solves all your problems. We spend a number of meetings with our clients. We go through a very good educational process. I think that the financial education that people should have is essentially
Mm.
missing in our formal education system. So there's a lot of educating, and I just believe in my clients. I think that my clients are smart or smarter than I am. And if they are given good information, they're going to make fantastic decisions. That's just my underlying foundational belief. And then I think the other thing that builds trust is accuracy, right? Like if I'm recommending something or if I'm teaching something and then they prove it to be true, then wow, it's easier to trust Kyle next
Right.
time he's talking about something else. So over time, my clients, even after the initial planning process, we have annual reviews with our clients. But I would say my best clients, the ones that are really applying the principles, they call me regularly. I just got a text earlier today from one of my clients that has some property. They're going to use some of the equity in that property to expand their business, things like that. And we're going to talk about that. They wanted to my 2 cents. And so I think that's where the trust comes in. I'm reachable, they can talk to me about anything. They can call me with any question. I don't just sell them something and wish them
Right.
well.
Right. Well, that's the education piece. I think you've hit something there. When I talk with physicians a lot, that one of the things they'll mention is, hey, there's almost like this apology for thinking that some of their questions are going to be so rudimentary, so elementary. So like they may say, hey, this may be a dumb question. This may be, but and I've had them say, we don't get taught these things. Like we're not prepared for making these decisions. So we have to go kind of find it on our own. And I enjoy educating. It sounds like you enjoy educating and making sure that they know why they did it, not just because Kyle said so, but here's the logic behind that. Does that make sense?
Yeah, I'm how if you had a mom or a dad that was really good in math, and when you were in high school, you didn't want to go to that parent because they would tell you all the how to apply it in every way. You're like, just give me the answer. I'm that bad
Well,
parent. I'm that
right.
parent that wants to explain it all.
Right. Right. Right.
So, but ultimately that's our goal, right? Going back to me, my hobby of being a fisherman, you know, the best thing I can do for you isn't just to give you a fish. It's to say, or to even hand you the rod when the fish is already on the line. It's to teach you how to do
Mhm.
it and the why. Why am I using this lure? Why am I, fishing in this area? And then you can go do it on your own. My goal is not to create dependence from my clients. My goal is to help them become as independent as possible, free thinkers, to have criteria in their mind so that when they're faced with any decision financially, they can run it through that filter and make great
Mhm.
decisions.
And obviously reach out to you if they want to or need to, but you're not the glue holding it together, it sounds like.
Right.
Right.
Right. Yeah. Eventually I'm going to die and I want them to still be able to be awesome
Right.
financially, right? Be successful.
So if someone's listening to this and they don't tune into any of the educational webinar, series coming up, what's one piece of advice you would give to a physician who's, gonna take this and just leave them something with something to remember if they don't remember anything else?
I think kind of referring back to a podcast we had a long time ago, Billy, that we did, I think if people can view their business, right, their profession as being actually two businesses. One is how they make money, right? And that's their business. And then the other one is how do they handle their money? What do they do with their money? That's another business. And we're kind of because of the way the system works, we're all thrown into both of those businesses, right? And most people fail miserably at the
Mhm.
second one, regardless of how much money they make. They fail at it. And it's, I would say by far the majority of the reason is because of the lack of financial education that's involved, right? I mean, people are taught how to make money. You talk about physicians, right? They go through a huge amount of education, formal education, and how much of that is related to money? How much of that is related to their insurance decisions? How much of that is related to taxes or debt or income or investing? Almost none, right? They finish that entire amount of schooling and have almost no education as far as money goes. And so it's not shocking. It's not surprising. It shouldn't be surprising to anybody that people
Right.
struggle
Yeah.
financially.
Yeah. I sense that a lot of questions and dissatisfaction with the answers that people get. Sometimes I wonder if that's just because it's not the answer they want, but I think a lot of times it's because the people that are answering it haven't really told them anything that they couldn't have found out on their own. So one last thing, you're a reader. I think a lot of my clients are readers, clearly, to go through medical school and do the things that they do. Who are the Can you name 2 or 3 authors and books that you would recommend people read that you would love it if everyone read this? It would make your job easier, it'd make their life easier and get them where they wanna go. What would those Sounds like Rich Dad, Poor Dad might be one, but can you throw that out?
Yeah, Rich Dad Poor Dad. And if you wanted to read one more of Robert Kiyosaki's books, I would recommend Who Took My Money.
Mm, okay.
Fantastic
Mhm.
book. Uh, and then I would recommend Justin Donald, his book called The Lifestyle Investor.
Okay.
And just really awesome. If your goal is to become financially free one day, that doesn't mean retire. I don't actually use the word retirement a lot. That's not really my goal. My goal is to help people be financially free, which could mean you keep doing
Right,
what you're doing if you
right.
love it. But Justin Donald's book is probably, cover to cover, one of the best books as far as that
Awesome.
goes.
Awesome. Well, thanks, Kyle. Thanks for your time and sharing your wisdom here and feedback, and look forward to going a lot deeper in the series coming up, and grateful you're participating. So thanks for joining us.
Thank you.
Absolutely. So, please feel free to reach out to me anytime if you'd like to chat further or get in contact with Kyle or have questions or what have you. 704-270-2376 is my number. You can text me and we can arrange a time or talk further then. 704-270-2376. Again, it's Billy Gwaltney. Thank you for joining us. Looking forward to seeing you again soon.
Thanks for listening to the Cover Your Assets podcast, a Work P2P production. New episodes drop every 2 weeks. If you've enjoyed the conversation, subscribe, rate, and review this podcast. For more tips and advice, visit the website and YouTube channel. Check the show notes for links. Join us next time for another episode dedicated to helping physicians like you get your disability insurance right and protect your way of life.